The market behavior is changing. Perhaps a new correlation is developing. What was once bad news may now be good. To understand this, we'll begin with today's inflation report. Inflation is cooling. We're talking about the CPI on a year over year basis. It was released at 2.3%. This is the lowest low we've seen since 2021, certainly declining prices. Here's core CPI on a year over year basis. That excludes food and energy. That came in line with last month's reading of 2.8%, but still good news. Now, good news for the stock market as well. Goldman Sachs raises the S&P 500 forecast after the US and China agree to lower tariffs. But it's not only because of the lower tariffs, it's also because of the cooling CPI. Here they said Goldman Sachs raised its projections for the S&P 500 after the US and China agreed to lower tariffs on each other's imports for 90 days. The analysts said they now expect 11% growth from the index over the next 12 months. The higher forecast reflects lower tariff rates, better economic growth, and less recession risk. That's by Goldman. They also said that they now expect the S&P 500 to grow 1% over the next 3 months to about 5,900. Wait a second. We're actually at 5,900 right now. Not a really bold call. Market closed just below 5,900 today. Now, we've seen a tremendous move off the tariff crash lows just over the past couple of weeks. Here's crude oil. It's also been quite strong. It acts as a proxy to economic growth as well. A stronger economy, requires more crude oil. That's just below $64. And by the way, notice that $64 level, that represents the highest high we've seen since the gap lower as a result of the tariff scare. Here's a 10-year US Treasury in yield that's also been soaring, closing today at 4.49%. In fact, we touched 450 earlier. This is the highest high for the yields we've seen since, February 19th. Now, a new market correlation could be developing. Here's a CPI again on a year-over-year basis. Remember last month? It was at 2.4%. That was a big decline after last month's or the prior report of 2.8%. And this month again, another decline to 2.3%. However, last month, the cooling inflation, it served as bad news for the markets. We can see this is also published on April 10th. That was when last month's CPI was reported. Inflation cooled significantly in March ahead of the tariff-fueled price jumps. Now, this is the candlestick of April 10th when the last month's CPI was reported, and it was a big down day that day. The market, the S&P 500, it was down 3.5%. However, today, the CPI report was released, and the markets were up almost 1%. So something has changed. Last month, the cool inflation report was interpreted by many as a sign that the economy is cooling. Now, a cool inflation report, it shows that inflation is cooling, but the economy is still strong. The market, all of us, the buyers and sellers, are looking at the same data in a different way. Here's the VIX, the volatility index, also known as the fear index. When stocks go down, this goes up. That big spike, that's the tariff scare we saw just in the past month. However, today, we're closed at 1822. Now, we've talked about this in the past. We've done historical studies over many decades. A VIX around 18 is actually the historical average for a very long period of time. We're right back to levels that we'd expect to see stocks trend higher. Now, the question is this the beginning of a new bull market or a bull trap? Well, we asked all of you yesterday, vote on our poll. Do you think that, number one, this could be a bull market? Are we going back up to all-time highs? Or is this a trap, a bull trap? Are we about to see a big reversal lower? Or is this a range-bound market for the foreseeable future? We don't expect anything big. Well, 41% voted that we're going to all-time highs. Another 41% voted that we're going to go down. 18% range-bound market. Well, maybe the contrarian in us, we'd like to, bet on the outlier, meaning that the range-bound market could be the new market trend for the foreseeable future. Now, we'll post the link for this video. This is what we published yesterday. We looked at evidence that points to both cases, either that we're in the beginning of a new bull market or this is just a wild setup for a bull trap. And let us know in the comments what you think. Does today's market behavior change your opinion? We hope this has been helpful. We look forward to seeing you back soon.